Everybody, this is John. Welcome to the free video, and let's take a look at what is shaping up. So we're going to look at two daily charts here in the free video. Okay, you can see daily chart there, daily chart there. This has the voodoo lines, volume, squeeze, and the 8 and the 21 period moving average. And then over here, we can just kind of see the chart pattern that's setting up. We have the volume, which is honestly a little redundant. We'll swap that out with something else real quick, but the put-call ratio here is actually very important. Okay, so what I've done is I've just changed the volume there with implied volatility. So this just shows a rise in implied volatility and, of course, a decline in implied volatility, and typically it always reverts back to the mean, so it's good to know where it is. So if we look at Apple, Apple obviously is a big part of the NASDAQ right now. We've got a bearish pattern, and that's what I kind of want to focus on here is when you have a kind of a big sell-off like this, it essentially becomes eradicated the quicker and the sooner you can take out the high. That's what happened here. It's like, oh my God, selling takes out the high, and it's completely eradicated. And the problem, though, is that if it doesn't do that, okay, and let's go back to Apple here and just say, and this is not anything in particular against Apple. Apple's obviously a great company and stuff like that. But if we come back here and say, oh, look at this. Okay, we've come down, and we did not immediately go back and take out the high. What could happen? Well, you can see what happened here. And, that was a pretty ferocious decline. Of course, when this happened, this was back when Apple was pre-split, $705, and fell back, almost 50% in value. And the key with that is to be able to recognize the pattern, okay? And coming back now is a pattern that took place, back at that high, similar to what's setting up here. Because if it is, there's a real danger. And if it's not, then it's fine. And the reason it's important to understand the pattern is because the pattern is the blueprint of every human emotion and action that is going through the market, okay? Fear, greed, et cetera, et cetera. And when these emotions kind of get to a point, the idea that it's like, wow, if there's, too much greed, that's going to form a pattern. And when there's too much greed, that means there's too many people in that stock in one position, and that's typically a top, okay, and vice versa. So it's just important to understand that. And another kind of beloved stock, I love trading Tesla, and, looking at what's going on right now is Tesla in trouble. The market's been, really going well here, and you can see we've gone from 250 to 223, and that doesn't tell the real story. The real story is that, we peaked back here. Now, I love Tesla. I want to get a Tesla. And the guy who runs this company is a genius, but that has nothing to do with its stock price, okay? The pattern represents what is going on, and extremes on one end of the spectrum always result in extremes in other ends of the spectrum, and you can tell kind of where you are with the pattern. Now, the squeezes and stuff like that are great, but if you can understand squeezes in the context of the bigger kind of psychological pattern, it just gives you a huge edge. So as we head into this week, the most powerful pattern that's setting up right now is on the dollar index on a monthly chart, and you can see what's happened to that. The pattern on the monthly chart, so powerful that it's done this on the daily chart and driven it up to at fire line. Now, I believe that it's going to take out this fire line eventually. I don't know if that's going to happen on Monday or it's going to consolidate for a couple of weeks, but when it does, that opens up the door to 96. And you can imagine the devastation that is going to do in certain parts of the economy. Or not really so much the economy, it's certain parts of the world, certain asset classes, especially emerging markets. And if you understand that process, it just gives you a really huge edge going into the end of the year and into the new year. And those are trade setups and things like that I'll talk about. But again, it comes back to, what is that monthly pattern that set the dollar off? So along the lines of patterns, because they're so important, I'm going to be talking about these on Tuesday, December 9th. That's going to be 8 o'clock East Coast time, 7 o'clock Central, simplerstocks.com/pattern. And you might be thinking well, John, this is an option video. What do I would need to hear about simpler stocks? Obviously, on the options that we're trading, we are trading the underlying stocks. And of course, the chart patterns of the underlying stocks are one of the main things that are going to be driving that stock. And of course, that's going to impact our decision on to which option to get, right? So I'm going to be going through chart patterns that overall, how they help signal to traders that a stock price is about to move in one direction or the other. Understand the basic chart patterns that you must know to become a better trader. What chart patterns are the most important, so you can focus only on those that work. Why chart patterns have stood the test of time and still work today. You know, and one thing too that a lot of people don't know is that, of course, hedge funds know all the basic chart patterns and they will take advantage of that. And so you may think that something is going to set up, you know, like it's supposed to in the book, and then it doesn't work. Well, guess what? Those are hedge funds screwing with you, and we'll talk a little bit about that as well, okay? If you're interested in this, first name, email address, register now. You'll get the information, and I'll see you Tuesday, 8 o'clock East Coast time, 7 o'clock Central. Have a good one, and see you at the next update.